Thanks for clicking. The London and St. Thomas Association of Realtors, LSTAR, released London's real estate data for the month of November this morning, showing the biggest price drops that we've seen since August. In fact, as we'll see, London's average house price has dropped over $200,000 since its peak in February of this year. The news comes amid prediction season, and we're starting to see a number of predictions come out for Canada's real estate market for 2023. But going into next year, it's worth taking a look at how far London's market has come in the past 12 months, as we've seen substantial changes in just over a year. So what I want to do today is go over London's real estate data for the month of November, take a look at not only how much prices have changed in the past year, but also affordability, and then discuss what to look for next year, going into the 2023 market. This will be the last London update for 2022, but we'll obviously continue to track London's real estate market in 2023 as the Bank of Canada's interest rate hikes work their way through the London market. Click like and subscribe if you want to get those updates, but for now, let's get into this data. First off, the benchmark price of a home in London and St. Thomas. The benchmark price is the price of a home which represents the most popular set of features, and that was down almost $10,000 in November. In October, our benchmark was $584,200, and that was down to $575,500 in November. So about a $10,000 difference in November, but about a $175,000 decrease from the peak of our benchmark price in February. And the average price of a home in London fell as well, almost $20,000. The average price in October was $630,282, and that fell to $611,643 in November. In February, the average price of a home in London was $823,000. So that's about a $210,000 drop just this year alone, since our peak in February. And that's also a $20,000 drop since just a month ago, which is the largest drop that London has seen in its average price since August. However, the median price of a home in London was up, although marginally. If you'll remember, the median price of a home is where half as many homes were sold over that price and half as many were sold under that price. The median price of a home was up to $577,500, which was up about $2,500 from October's median price of $575,000. However, while the median price was up, homes continued to sell for more under asking price than they did before. The sales to list price ratio, if you'll remember, measures by how much a home sells over or under asking price. So if a home was listed for $100,000 and it sold for $96,000, the SLPR would be 96%. London's SLPR was down to 96.5% in November, down from the 97% that we saw in October. So on average, homes were selling 3.5% below their asking price. Next, the months of inventory measurement, the MOI. The MOI measures how long it would take for all of our inventory to sell off if no more homes came to market. The MOI remained unchanged in November at 2.8, unchanged from October's 2.8 as well. So, if no more homes came to market, it would take 2.8 months for us to run out of homes for sale. So, in summary, the benchmark price down by about $10,000, the average price down by about $20,000, the median price up about $2,500, and homes are selling for more under asking price, and we have about the same amount of inventory that we had in October. But how far have we come since this point in time last year? At this point in time last year, the average price of a home in London was about $674,000, and now it's about $611,000. So that's about a $63,000 decrease in the period of 12 months. Last year, at this point in time, the sales to list price ratio was 111.3, and now it sits at 96.5. So last year, homes were selling for 11.3% over asking price, and now they're selling at 3.5% under asking price. And finally, the supply, and this really gets to the heart of the decrease in our home prices. Last year, we only had 0.5 months worth of inventory. So at this point in time, in December of 2021, if no more homes came to market, we would have been out of homes in half a month. Now we have 2.8 months worth of inventory. So there's a lot more inventory out there and not as many buyers. So prices decrease. But what about affordability? Prices are down and we have a lot more homes available. But is it any easier to qualify to get a home in London? If we use last year's $674,000 average price and we qualify at 5.25%, which we had to at this point in time in 2021, and we use a 25-year amortization with minimum down payment requirements, the average home buyer needed to make between $135,000 and $140,000 to get that average home depending on the property taxes. However, now the average price is $611,000 and we have to qualify at 7.29 instead of the 5.25, 2 points above a decent 5-year fixed, fully featured insured interest rate of 5.29. So now if we take that $611,000 with minimum down payment requirements, zero debt, a 25-year amortization, and qualify at 7.29, that average homebuyer needs to earn between $145,000 and $150,000. So, compared to a year ago, prices are down a little over $60,000, but it's actually more difficult for the average homebuyer to qualify for a mortgage. Due to the stress test and higher interest rates and buyers having to qualify using a rate over 2% higher than it was last year, it's actually more difficult for that average homebuyer to buy that average house. With that said, for those homebuyers that are in the market, it's actually much easier to be in the market than it was a year ago. With the sales to list price ratio down to 96.5, homes are going for under asking. And with 2.8 months worth of inventory, the buyers now have much more power than they did 12 months ago. Buyers can and should now have financing conditions. From experience, last year at this time, buyers who put financing conditions on their homes, those offers were dead in the water. If you had a finance condition, and you still should have, but if you had a finance condition, you weren't going to get your offer accepted. Not very many conditional offers were accepted in London. However, more and more, that is becoming the norm in London, where the buyers can have financing conditions, that they can have house inspection conditions, and they can submit offers under asking. Buyers have a lot more power and will most likely have more power going into 2023. Interest rates are set to go up on Wednesday by 25 to 50 basis points, and they could very well continue to go up into 2023. And as we've seen this year, as interest rates go up, London's house prices are coming down and coming down substantially. We are down $20,000 from last month. We're down $60,000 from this point in time last year, but we're down $200,000 from our peak in February. So, these year-over-year price declines are likely to only continue, at least for the foreseeable future, as the interest rates continue to rise and affordability, in a lot of cases, gets worse. With that said, we will continue to track the pace of the Bank of Canada's interest rate hikes and its effects on the London market all through 2023. So if you want to get those updates, make sure you click like and subscribe. But for now, thanks so much for watching.